Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly, will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back. As always, it's interesting. If you're bored easily, you should just try watching the stock market. I'm just kidding. Friday was a big down day. Market closed below its halfway point. Was down fairly significant from the close the day before, but looking at that kind of stuff doesn't really help a lot. Stuff over day to day or week to week, realistically, if you're not looking out over a few years, you're probably making a pretty big mistake. And I know a lot of people get upset by that. And I talk to an awful lot of people in the same portfolios, and I've been managing money for an incredibly long time period. And it's just extremely volatile. And over the past 5 years, actually 10 years, you'd have just taken the top 50 stocks out of the S&P 500 just by speed alone. That's it. Those are going up the fastest. You'd have made a lot more money than the S&P 500 did. But you would have put up with an enormous amount of fluctuation. And I want to kind of hone in on that, because everybody gets, here's what it's like to be a financial advisor. I don't want to be all the way in the market because I can't take a chance of being down 50% or more. Okay? Well, what do you think we should do about that? Well, you're a professional, right? You can tell when that's about to happen. That were true, Warren Buffett would be following around trying to shine my shoes, dry my clothes just for tips. So it's not, and unfortunately, and I feel bad. A lot of people don't really know any better, which is kind of amazing to me, because there is a ton of material out there, and I guess maybe it's just not being marketed that well. But when you observe what happens in markets, when you have some software that allows you to track what's going on, when you've watched that for years, you begin to realize that there's not a whole lot that's super easy to predict over even a few years. But the longer of a period that you look out, the higher your chances are of being correct, because in long time periods, markets have a tendency. And that's just the nature of the beast. It's how the Fed sets their interest rates, their reserve requirements, which I don't hear anybody talking about anymore, which is way more important than interest rate by far. And if I don't want to debate that with anybody, I'm just going to say go and look at the data. And there's a guy by the name of Paul Volcker. Look him up. See what he did to the Federal Reserve System, to the banking system, and how effective that was in raising interest rates without having to raise interest rates. That was mind-boggling. So, I know this is probably like way over everybody's head, and I apologize that I get carried away sometimes. But anyway, market ends up really well this year. And if you look at, and it had one of the better years I've ever seen. And the correction that came along, I mean, it was only a couple weeks, or at least the recovery. Look at 3 or 4 weeks, and it had nearly recovered all that it had declined, and so that's pretty amazing. If you were in the growth oriented, and that's something we'll talk about on future shows. But when you look at exchange traded funds, the material or the returns can be incredibly misleading. And what do I mean by that? Well, you see something that's gone up, and normally it's a sector fund. It's like financial services or any of the other major sectors, metals, you name it. There are 14 major industries that make up the S&P 500, and any one of those industries can have a really good year, and it looks great. The problem is they don't tell you when they're about to change or when the leadership's about to change. Market doesn't tell you. The signals that it generates, there are a lot of false positives. In other words, you get a signal, oh, time to go, and then the market turns around and goes up without you. So that is not a good idea. You can time the market without actually having to time the market. I know that sounds like a bunch of gobbledygook, but the reality is that's what the whole rebalancing idea has been about from the very beginning. You're going to rebalance your portfolio, and you don't have to do it every year. If the market's down by more than 25% or so, you may want to start watching and making adjustments at that point, because that doesn't happen all that often. And when it does, oftentimes it's presented a really good time to increase the stocks and sell some of your bonds, which is the exact opposite of what most people want to do. Most people want to be running away from it, as if these companies are going to go away tomorrow. That is never happening. I mean, the vast majority of the big companies in this country, they're here for a very long time. And that's the other nice thing about doing indexing or any other strategy that you use, quantitative strategy. You can stick with the companies who still have or are still profitable if you want to. You can go with those companies that have sales. You can go with companies that have a certain ratio between the physical assets of the company and the price. So this is what exchange traded funds do. They're clearly defined, and so you can go read about it. You can look up the history, look at how that's behaved during different economic environments, and I'm basically explaining my job. This is what I do, and I would have done it as an individual investor anyway, just because I have a lot of interest in it. And it's why you'll never hear me panic. I mean, you're just not going to. And I run my own personal money the same way that I invest for my clients. Mine's mine's more aggressive than most. I have about 70% of my money in stocks and only 30% in fixed income, like 25% more traditional fixed income like annuities. And then I have some government money market funds. So not rocket science. You have to know a lot about it. Not really. I mean, if I wrote it down and showed it to you and you just stuck with it, you could do it. The problem is all the noise, all the stuff that you hear, all the stuff that's written. You see a stock that's gone up 5, 6, 7,000%, over the past 4 or 5 years, and that's when most people get convinced it's probably going to go forever. And typically, they're probably within 25% of the actual all-time high before it turns around and crashes. So the job it's a hard job. It's a really hard job. That's one of the reasons, I've had people calling in saying, hey, Bill, why don't you talk more about stocks? You used to talk almost exclusively about stocks, and now you don't talk about it that much. Well, I've actually watched what the average investors are doing, with their individual stocks. They can't stand to watch what's going on, and that's when they started bringing out exchange traded funds. I was like, oh wow, this is a big deal because now the clients can't see what's going on inside the fund, so there's going to be less news there to upset them. They'll probably be more successful. And you know what? Look at the success rate of the average investor and the growth in exchange traded funds. Am I saying one has caused the other? Not really, but I'm saying it's a contributor. I'm telling you, it's a contributor. And if you're going to increase the performance over a market cap weighted index, say like the Russell 1000, you can do it. And there are some funds out there that have the algorithm. They're going to be a little bit more volatile, and that's another thing that used to talk about quite a bit, but now there's actual proof of it. You don't have to believe me. The websites are out there. Go sign up for one of these websites that gives you the ability to run hypothetical illustration and just see. So I know nobody really wants to do that. It's actually one of the reasons I have a job, and people are trusting that I am doing that work, and which I am. And it doesn't really help if you don't stick to it. That's the biggest problem. People underestimate all the time the amount of risk that they can actually handle. And despite the fact that I developed my own risk tolerance questionnaire that's now being used by the biggest institutions in the world, by the way, I was only about 15 years early on that. I was tired of people not being able to understand the questions that they were answering on those questionnaires before, when you're setting your portfolios up. And so I made mine a lot simpler. I've talked about it a lot on my radio program. Maybe that's where they got it. Maybe they heard it on the radio. I don't know. But the bottom line is that the S&P 500, which outperforms a great number of actively managed stock funds, and individually managed accounts. But it's in the top 10%. If that is so hard to make money in, why? Why is it so hard? And I can tell you why. Because it's really volatile. It goes up and down a lot. So if you're not prepared for that, and if you want to beat that, by the way, your volatility is probably going to be slightly higher than the volatility of the S&P 500. And I hate to break it to you. Actually, I don't hate breaking it to you. Talking about this for over 20 years. It's amazing how, I guess, what really happens is people get started in their lives and they have children or they get careers that are require long hours or they're building a business and they just don't have time. I get that. I really do get that. And I feel bad because today there are a bunch of tools that you can use that make it a lot easier. But if you don't understand the very basics of just how volatile all this stuff can be, you're probably not going to do well. And because it is shocking. And I remember when I first read about all this stuff, it was a book by Peter Lynch, and he said he couldn't stand to see the value of your stock drop by 50% or more. You shouldn't be buying stock. And I thought he was kidding. I literally thought he was kidding. By the way, if you put $10,000 in the fund that he was managing, and he got into it at a really crappy time, by the way, the early to mid 70s when the stock market was doing not good, he put $10,000 in there, and 13 years later, when he retired in his early 40s, he went back to work for Fidelity as a consultant. That was what they worked for. But $10,000 would have been worth a little over $300,000. Think about that for a second. And when I say that, what really kills me? It's how people go, "Oh, well, that doesn't sound all right." I'm like, wow. It's only the best returns from a publicly held mutual fund or a fund that was available to the public. It's the best all-time track record since a modern time after World War II, I guess. Anyway, the bottom line is where are we now? If I was predictions, the predictions I'm going to make are, yeah, things are really not that bad. A lot of people are upset by what's going on politically, and I'm telling you, I learned to block that out years ago. Actually, before I even got in this business, we were in a upper level class, and I got just got the note that I've only got a few seconds left to take commercials, or they'll start running them right over me. So we'll pick up on these thoughts when we come back in this commercial break. This is Bill Bullington right here on 1420. Stay tuned because I will be right back.
Hey, so question for you. Have you ever been through a Cleveland winter before? The harsh weather is on the way, and if you've got a leaky roof right now, or if you've got shingle issues, you need to take care of those, and you need to call Sky Roofing right now. If you've had leaks repaired in the past, maybe by a company that isn't around anymore, don't go with the fly-by-night storm chaser companies. Go with a company that's been here for a very long time and is going to be here for a very long time to come. Talking about Sky Roofing, taking care of homes and buildings in Greater Cleveland just like yours for over 22 years. So if you've got leaks, if you've got shingle damage, you need to get those things taken care of. Or if it's time to replace that roof altogether, call Sky Roofing, 440-349-6750. And if you've got new construction and you need a roof put on a new building, you call Sky Roofing. Take advantage of great rates on 5 to 7-year financing, including 12 months, same as cash. Call now, 440-349-6750. Sky Roofing is roofing done right.
Wish there was a place to find good, clean, family-safe entertainment? A place with no violence or profanity? Where you can let the kids roam free? That place is the all-new GodTube.com. Watch inspirational videos that'll challenge and motivate. Catch the latest music videos from Christian artists like Jeremy Camp, Hillsong, and Chris Tomlin. And share a laugh with clean comedians like Tim Hawkins, Anita Renfro, and more. All free, 24/7, right in your own home at the simple touch of a button. Visit the new GodTube.com. That's GodTube.com.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year, they were back for the master bath. Oh, my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com.
You've heard the saying, all good things come to an end. Well, not always. Sometimes they just take a break. That's what's happening with Our Lady of the Wayside's car donation program. After 24 years and 96,000 rides donated. Pretty amazing. Here's the story. The car lot's owners sold the property, making it impossible for car donations to be accepted at this time. According to the Wayside CEO, Terry Davis, the next right steps will be determined and communicated soon. So stay tuned. In the meantime, Terry and the entire team at the Wayside thank you for your continued support of the 450 individuals with developmental disabilities in the Wayside's care. And please take note, you can still support them by making a donation at thewayside.org. Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit joycefactorydirect.com.
Hey, this is Bill Bullington. I'm here every morning on Saturday from 11 to noon, 1420. If you'd like to, actually, you can go to, what do I want to say? YouTube and type in Bullington Capital Report. If you miss it, you can actually pick it up there. Or my website, it's bullingtoncapital.com. If I say something that you'd like to talk about or you'd like more information on, feel free to give me a call. 330-664-0700. That's 330-664-0700. Or you can go to the website and just jot a little note. Send it. I'll try to get back to you as quickly as I can. And by the way, it might not be right away. This is a busy time of year. a lot of my clients are getting to that age now where they have to do required minimum distributions. And poor Melissa has to fill out all that paperwork. But I try to help her with it, try to come up with ideas for people. And a lot of people will ask, well, should I, when do I take start taking distributions from my IRA? And that's a good topic. And it really depends on a lot of different things. And quite frankly, you're going to have to answer some questions that you may not really know the answers to, like how long will you live, and what kind of returns will you generate. And that would be the A-plus job if you knew exactly how long you're going to live and exactly what your returns are going to be. Both of which, the reason I'm laughing is because they're both impossible. You can't really know that. When you're managing money, you're shooting for a potential return. The higher the return, the higher the fluctuation of the account value is going to be. You can't get a really high return, which would be considered anything over 10%. Actually, in this day and age, anything over 5%, because that's where the high quality fixed income kind of stops right now. If once you get out of the high quality fixed income, now you're getting into stocks, and even the high quality stocks have a huge range. And I'm one of the few advisors that I know of that actually addresses that topic. Vast majority of my industry looks at the total return and markets that like crazy. Hey, look at what this has done. Okay, well, see, that's implying that that's going to do that again. And in many cases, it might if you hang out long enough, but inevitably, there's going to be some really big declines. You cannot invest in stocks which have the higher long-term returns of any of the asset classes. You can't invest that way. By the way, when I say that, I mean the ones that are available to the general public, not private real estate or LPs and that kind of stuff. Those are fine. There have been some that have done a little bit better than that, but they're generally not available to the general public. So anyway, bottom line is very, very, very difficult to make more than 5% a year without putting up with this fairly significant amount of fluctuation. And as I say that, I'll be eligible for 60 for early. Well, not early. I'll be eligible for Social Security in February. I'll be 62, and I'm not taking it. The longer you put it off, the more it is, and I don't really need it. And at 62, if you're still working, you'll end up giving back most of what they're giving you anyway. So, and that's something that I went and subscribed to this software. I haven't gone on to it yet. But one of the other dozens of projects I've got going on right now is to be able to do some pretty decent analysis with Social Security, and I'll be working on that over the next few months as well. I do have I did get all the research done for the model that I'm going to use. We've got a relationship with Goldman Sachs, and very difficult to actually be a client of that company. They have really huge minimums, but they let us in on their platform, and our minimum account size is significantly smaller than theirs is. Theirs is $500,000. That's the minimum. At least that's what I've been told. And I don't know, because up until this point, I've never really tried to open an account there. But anyway, I've got some of my money there. This strategy that I was talking about, it's basically math. I'm just looking at the top 1,000 stocks, Russell 1000, and I'm looking at these 40 stocks that are going up the fastest at any moment in time over the last 6 months. So it's a 6-month relative strength for all of you math geeks out there. And and you come in once a month and rebalance the portfolio. Now, if this is not an IRA, if you're not doing this in an IRA, the reporting on that is going to be, I mean, you're going to have a 50-page 1099. Okay, you can just use the summary page, which is what I do with my taxable account. But all the little transactions, because you are actually taking every position and adjusting it once a month, 40 positions. That's a lot. So you're going to have at least 40, sometimes probably 50 or 60, because you'll be replacing stocks completely. And you might have a buy and a sell. Yeah, you probably have close to 80 now that I think about it. Yeah, so in a taxable account, not sure I would go there. If it's an IRA and that stuff doesn't matter and you're not being charged for it anyway, hey, you know what? That's probably a pretty good deal. And I am going to do a seminar probably the end of January, first week in February. We haven't really decided on the date yet. We're shopping for the venue now, probably be at the same place we used to do them. And because this is a pretty big deal. To be able to make this available to the general public is a really big deal. I think it's going to help. I think in the type of environment that we're in, making adjustments more quickly or faster probably helps. I know I'll have a bunch of people that are not really understanding what I'm saying right now, and they're dreaming up things in their head, and they're gonna come to me and say, "You can make this happen, right?" Well, no. It's unfortunately that's the way it goes. It's mind-boggling. You can't just dream something up. Well, the chances of you dreaming something up and someone being able to employ that on your behalf and make it work like you want it to, it's hard. If you had a ton of experience doing this kind of thing, then you would know, and you'd be much more accepting. So, and if you are one of those, if you're a quantitative investor, and that seminar is going to be very interesting for you. So again, it's going to be somewhere in end of January, early February, and I'm going to show you these things that we're going to make available to people that want to have individual stocks. And I like individual stocks. I will not call you and say, "Hey, should you buy this stock?" That's never going to happen. I have way too many clients to be able to do that. I have a hard enough time getting hold of people to make adjustments in their current accounts when we're using funds. So funds are a little easier than individual stocks are, and we are really busy with that. So to do a stock portfolio, you have to define it. It's got to be clearly defined. And if you're not clearly defined, then the chances of that actually working go down a lot. Okay, so it's got to be rules based, and just like almost anything else. And I've done this for so long that when you put rules together, that helps you throughout all the rest of your life. If you have a task that you want to do, sit down and write down all the mini tasks that build up to what you're looking for to accomplish in the big task, and then just check them off one at a time. You've probably heard that a million times during your lifetime. But yeah, it works in investments too. And it works very well in investments because you get to know and you get to expect what's going to happen. Like when the market comes down, people will ask me, "Did you know that was going to happen?" "No, but I expected it." "What do you mean by that?" "Yeah, well, it can happen at any time, actually. And so I know not to get surprised when the market moves down or up. It moves up really fast now, too, especially since most of the transactions are done by computers. And it's mind-boggling how fast it moves in both directions, quite frankly. In the long run, what's going to matter most is how they're invested. Are they invested in companies whose sales are rising, whose profits are going up? Are they not overweighting it by too much. What has worked well in the past doesn't mean it's necessarily going to work well in the future. But all other things being equal, if you've got 4 or 5 strategies inside of your portfolio and they've all done very well, typically most of them will come close to what they've done in the past over a full market cycle. And I'm talking about relative performance. If the market does X, this one's typically done X plus or X minus, whatever it was. And in the long run, it's just a much better, more informed way of investing, especially in stocks. Stocks are hard. What's not hard is, or at least I don't think so. For an individual new investor, I think the fixed indexed annuities are extremely difficult. You need to, you'll spend months reading the material that they put on it, and one, if you really want to understand exactly what they're doing. And or you can go to the highlights. And I like to talk about the highlights. And if you really want to talk about the internal structure of the funds, I have no problem having conversations about that. We can definitely go through those if you really have that much interest in it. But here's what I would concentrate on. Most annuities are designed to generate income at some point in time. So, and there are a bunch of different types of annuities, but all of them share that main attribute of it's an investment that you expect to take income from. Now, you may never get around to taking the income. Why? Well, because you didn't need it. And if you didn't need it, it continues to grow and compound, and it's done on a tax-deferred basis. So you're not getting 1099s as the assets are growing. You only get a 1099 when you start to take income from it. And the income is going to be split between what's counted as a return of the original principal plus the interest. So there's a benefit, if it's not in an IRA, by the way, if there's a benefit to what they call non-qualified, or those are annuities that are not in IRAs or 401ks. If it's not in one of those, a portion of it's going to be taxed, and a portion of it's not going to be taxed. So there's even a tax break when you go to turn the income on. Now, the main reason that they are so popular is that they're looking at this kind of like a reverse mortgage. They take your life expectancy, and there's a number the insurance company thinks they can average as a positive return on the investments, so they can guarantee you X number of dollars. Now, they're calculating that net of their fees, by the way. The income that you get is net of their fees. It's not net of taxes, unless you have them withhold the taxes. You can do that. You can set up your checking account so that the money goes right into the checking account, and they will withhold state and federal taxes. And I'm not sure how many of them do the local taxes. Some do, some don't. But anyway, it's pretty convenient. Then it goes right into your checking account, like your Social Security. Unlike Social Security, it doesn't have a cost of living adjustment each year, so it's a fixed. That's where the term fixed came from, fixed annuity. You've got typically a fixed rate of return and a fixed income when you decide to take the income. So if you want a link to go to that website, I just punched in somebody who was 69 was going to put $100,000 in, leave it for a year, and which is necessary to turn the income on. But when they turn the income on next year, they're going to get $8,256. That's going to be guaranteed for their lifetime. So even if they live to 150, $8,256, that's pretty good. It's pretty good on $100,000. It's not like interest on a CD. That's a lifetime income. If you got that, and this one's got some interesting features on it. Those are the main features. How much am I going to get? What is the income guarantee on the annuity? And some of them have interest rate guarantees where, okay, we're just going to guarantee 5% for the next 7 years. And at the end of that 7-year time period, you can decide what you want to do. Do you want to stay in the product? Do you want to transfer out? Do you want to do an exchange for another one? But for that time period, whatever the agreement is by the insurance company, they're going to guarantee that interest rate, and that's what's going to happen. Some of them will let you take out the interest on it. Some of them will let you take out the interest plus principal up to 10%. There's a bunch of different rules. I mean, there are literally thousands of these. The reason I like the Nationwide is that it's got a guaranteed schedule that's really, in my opinion, it's incredibly difficult to outperform. So, like this 69-year-old, if you're going to wait 1 year, they're going to guarantee that you're going to get $8,256 for the rest of your life. If you said, I don't really need it at age 70, you go put it off another year. Great. It goes to $9,007. I get to that point. Well, you know what? I think I can still go a little bit longer. Fantastic. At 72, it goes to $9,891. Okay. So, and there's a guaranteed schedule there all the way out to age 79 for somebody who starts at 69, so 10 years. And the 10th year, it would be $18,917 would be the guaranteed lifetime income. But that's after you've held it for 10 years. So it should be a pretty decent number. And it is. So if you're interested in this stuff, and please don't write down stuff in your car. That's my biggest nightmare. Somebody's going to be trying to write this down, and you can go to my website and ask. I can send you a link over to the page. I can take your age and send you a couple of illustrations, all done on email. I am like I am now all the time. You will never get pressure from me to do anything that you don't want to do. And so that's how I've always run my business. I always will. I'm there to answer questions, show you what options we have available, which are in the hundreds of thousands, actually, because basically we can do whatever. As an independent registered investment advisor, you're allowed to do whatever you'd like to do. Not that you should, but you're not actually prevented from doing anything. You're supposed to work in your client's best interest. We'll talk a little bit more about that as soon as we come back from these commercial messages. This is Bill Bullington right here on 1420. Stay tuned. I'll be right back.
Hold on, is this really the life I'm living?
Wallacadoodle delayed?
Is Wallacadoodle denied?
And since we're the home of Wallacadoodle,
We're making same-day water heater replacement an always-on offer.
Since no one wants to do cold showers, other than CrossFitters and such,
we'll replace your water heater and Wallacadoodle your plumbing same day.
call us before noon and we'll get it done the same day.
Even upgrade you to tankless.
Or add a whole home water filtration system.
'Cause your tap water has more chlorine than the average swimming pool.
And chlorine is like the peel on a banana.
You want chlorine while the water is processed and traveling through your pipes.
But it's time to take it out before you drink it or shower with it.
That's what a water filtration system does.
It also takes out other chemicals you don't want to drink.
So if you want same-day water heater replacement,
don't settle for anything other than same-day Wallacadoodle.
Just call us and
consider it done at WyattWorks.com.
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as one day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit JoyceFactoryDirect.com.
Well, welcome back. This is Bill Bullington. I'm right here on 1420 every Saturday morning from 11 to noon. If you hear of anything that you'd like more information on, feel free to go to my website. There's a contact us page. The better idea is probably to leave a message on my voicemail. And my phone number is 330-664-0700. And don't worry about writing that down. That is also on my website. It's bullingtoncapital.com. And my last name is Bullington, Bullington, capital.com. And it's funny, a long time ago, I was just starting out on doing my radio program, and some guy called in and said, Bullington's not your last name. You made that up. You changed your name. Like, yeah, no, I'm pretty sure I didn't. But I thought, yeah, it's a pretty good idea. And my logo is a bull. If you get a business card or stationery. But anyway, yeah, it's the things are. Sometimes I'll get some reactions to my radio program because I like to look on the bright side of things, and believe me, it's not always easy, but it's always the right thing to do, because if you think that anything that's going on in politics or in the economy is really, this is going to be the big one, I got news for you. We have been through much tougher times than this, much tougher times, and things are actually pretty good. It's just a bunch of people making a whole bunch of noise on both sides, and I try not to be involved in that because it really doesn't matter that much. The way that our economy was set up, everybody's still got a chance here. You look at a lot of the big tech companies and how short of a time period that they've been around relative to a lot of the older companies and how much bigger they are. So there's still more opportunity out there than there's ever been. And despite the fact that the population is growing, well, the economy is growing faster than the population is. That won't always do that. And every time the fear takes over, and they're fearing that the economy is going to stop growing or it's going to contract, yeah, it goes down quite often. Good luck trying to predict that. I'm here to tell you, it was a lot easier 25 years ago when I was doing that sort of thing, and I did it long enough to convince myself not to do it anymore. It just, you can get lucky, and I did. I got lucky more times than I should have. Okay, but if you keep doing it long enough, you're going to figure out that too many things change too quickly, and you'll always be adjusting your models, and you're going to be doing with hindsight, and may continue to work that way for a little while, but eventually it's going to change. That's why I think the stock market works so well. It changes. New companies come and old companies go all the time. And that's one of the reasons that I liked the idea of using math instead of emotions over picking stocks. And if you look at the growth in the exchange traded fund industry, By the way, if you don't know how the stocks in your fund are being picked, you have a problem. You don't know why they're going up. They're just going up. That's why you bought it, because it's going up. That's the number one mistake individual investors make, buying stuff just because it goes up. Because what goes up eventually comes down. Some of it never makes it back. Some of it never makes it back. So you just have to be careful. And I don't want to. I feel bad when I take that tone of voice. I feel like I'm talking to my kids. And so excuse me for that. But it's hard. It's not easy. Very emotional. My best performing portfolios also have the highest turnover and the highest fluctuation. So it's just exactly what I had studied all those years ago and continued to keep up with all these years. At some point in time, and actually there are some funds out there, and I use them, that are pretty close to what I'm doing. Some of them are extremely close. And so I like it. And that's another reason I've had some people who are just staunch stock investors. And I used to talk a whole lot more about that on my show when I was younger and dumber. But they got upset, and I'm like, hey guys, first of all, if I took a look at the vast majority of the average investor's stock portfolios, they'd be better off doing what I'm doing. There's a reason I do what I do. Yeah, I have the option to do what you're doing, but even those that are capable, I mean, congratulations. Somebody's going to win the lottery too, and it's not always luck, but it takes an enormous amount of luck and skill to be able to do that. Whereas, you can do what I'm doing. It doesn't take nearly as much luck. It takes an understanding of what you're up against. How much fluctuation could you expect to see? Now, for me to generate that, I'm going all the way back to the year 2000. I remember living through that. That's how old I am now. But and I was running momentum models during that time period. And you know what? They got clobbered and they came back with a vengeance. And today it's a lot more tax efficient. You can do it with the individual stocks. I rebuilt those models and started rolling them out recently because there's a demand for it. I guess something doesn't happen for a long enough time period. People kind of forget. I'm still telling them, listen, see this strategy? We're taking the top 40 stocks out of these are the 40 stocks that are going up the fastest, and the Russell 3000 over the last 6 months right now. We're going to look at it once a month. There's going to be a lot of turnover because it's an aggressive strategy. Here's how much better it's done than the S&P 500, when it's fairly significant. Very, very, very difficult to do. And but this is the price that you're going to have to pay. You're going to have to watch a lot of stocks come in and out of the portfolios. Some of the ones that you really like are going to get sold a month later because they dropped. Then when they turn around and start running up really fast again, they might make it back in. That happens a lot. You got to know that stuff. That's one of the reasons I'm very thankful to have a platform like the radio station WHK, because I can come back and re-explain that. You can come back and listen to it again. And everybody needs a coach. I need a coach. I have people that I go to online, not personally talking to them. I will go back and reread the material that helped me to get to this point. And I'm doing it all the time. So anyway, long story short, that's something that is going to be available. We'll be talking about it every week. If you'd want to talk about it as an individual, feel free to give me a call or drop me a note. Then you'll see why, when you're looking at the annuity, why do I have a bunch of money in annuities myself? Well, there's a big portion that, between the annuities and my Social Security, I don't really need anything else. And that's a good feeling. I don't have a lavish lifestyle, by the way. Hopefully, if inflation really goes crazy, I'll have enough set aside that it's not going to affect me at all. But more importantly, I'd like to leave some money to my children, my grandchildren, and so that's what that money's for. And it's a good feeling to be there. It's not as difficult as a lot of the financial planning software programs out there make you think. Those guys are nuts. I'm just kidding. They're very detail oriented, and realistically, you need to know what your basic living expenses are. Whatever that is for you, and everybody's going to be different there. Some people can live on next to nothing, and some people are living on more than they're earning now. That's a problem. But you want to try to get a pretty good idea about what that is. How much do you think you need to be able to live on? Just multiply that number by 20, and then adjust it for inflation if you're more than 10 years from retirement. So if I had 100,000 in income, and you're probably going to be able to get by on 80 pretty well. By the way, that's not even taking into account Social Security. So Social Security is going to make up a big chunk of that. Probably cut that 80,000 down by more than half if you're making over $100,000 today. So bottom line is, it's going to reduce the amount. Social Security reduces the amount that you have to save by a lot, depending on the situation. It's anywhere from $250,000 up to $500,000. That's how much Social Security prevents you from having to save because of the income that you get that's going to be guaranteed, and it's indexed for inflation. So, pretty good. Just solved almost all your financial problems here in less than an hour. Just kidding. It's hard. Man, it is really hard. And that's one of the reasons I really like the annuity stuff. We're going to do a seminar probably, like I said, probably last week in January, maybe the first week in February, because this is, it's really important stuff, stuff that you need to know. If you are actually, the earlier you get started, the easier it is. But if you're like over the age of 50, and this is kind of the stuff that you need to be looking at really hard, really quickly, and that's what we're there for. My whole career, that's basically what I've been trying to do, is to try to help people to get to a point where they can retire and not have to change their lifestyle. Anyway, I've got just a few seconds left here, so I'm going to sign off. This is Bill Bullington. I'm here every Saturday morning from 11 to noon, 1420. Go to my website, bullingtoncapital.com, if you have any questions for me, or you can call me 330-664-0700. Have a good week, everybody. Good luck and good investing.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.